What is good, everybody? We are going to be going over fair value gaps today, okay? This should be probably one of the easiest confluences for you guys and girls to understand. It's one of the easiest ones that was personally for me to understand. Again, might be different for you. I don't know. Again, if it's difficult, that's okay. Just make sure to study it and keep studying it till you understand it. I want to go over, just like we did in the other videos, I want to go over the definition of what a fair value gap is so you guys and girls can write that down in your notebook. And then we'll go over how to identify a fair value gap, and then we'll go over in the live charts how you can identify them in the live charts and get a reaction off of them. And then tomorrow, when I post the other video, or the next day, whenever it is, I most likely will be tomorrow. Well, actually, again, I'm filming this video the day before, so again, it won't be tomorrow. But the next video coming up will be inverse fair value gaps. And then we'll go over more confluences going on after that. And then we'll come back to the fair value gaps and show how we use them off of liquidity sweeps, breaker structures, continuation confluence, stuff like that, and then we'll get into the overall strategy creation of it. So right now, I just want you guys and girls to understand what a fair value gap is, the definition, how to identify what a fair value gap is, and then we'll move on, go to inverse fair value gaps, and keep moving on to the rest of the confluences you guys and girls need to learn to be able to start identifying which way the market's going to go, how to get your entries, and help you start your road to trying to become a profitable trader in the long run, okay? So let's jump into what a fair value gap is. Make sure you get your notebook out, and we'll jump right into it. And let's go. All right. Okay, so coming right into what a fair value gap is. This is the definition I had. What the fuck? This is the definition I had that was written down in my notes. You can change it up if you want a little bit. Just write this down in your notebook. This is the definition I had in my notebook. It should help you understand what a fair value gap is. You can pause it, you can screenshot it, you can listen to me read it out. I'll read it out for you guys and girls, and then we'll go over how to identify a fair value gap. So a fair value gap is an imbalance in the market created by when price moves aggressively in one direction, leaving inefficient price delivery between candles. It forms when price fails to trade a certain level, creating a gap between the high of one candle and the low of another. And we're going to go over that right after this, okay? We'll understand how to identify them. Markets naturally seek efficiency, so price often returns to these gaps to rebalance before continuing its move. Traders use fair value gaps as areas of high probability entries, reactions, and targets, especially when aligned with market structure and higher time frame bias, okay? So again, what we're going to be using fair value gaps for, we're going to use them for continuation confluences. We can use them for areas we can target. We can use them to get a daily bias, which we will make a video on that too also, so you guys and girls can understand what that is. And then we also use them to identify like market structure, if we're in a bullish or a bearish trend, if we're respecting bullish confluences, if we're disrespecting bullish confluences. And we'll go all over that stuff when we understand what strategy we're going to create with all these confluences we are teaching you guys and girls, okay? So write this down in your notebook, screenshot it, pause the video, make sure you write it down, have it so you guys and girls understand what a fair value gap is, okay? 3, 2, 1, and we're deleting it. All right, you're good. You can pause the video and go back. All right, next thing, I already have these drawn out for you guys and girls, so you didn't have to see me draw them out in the videos. But let's go over what a fair value gap is, okay? So we'll delete this one over here for the bearish fair value gap, and we can bring that back after I click the backward candle thing. You'll understand. So a fair value gap, a bullish fair value gap consists of 3 consecutive candles, okay? We have to remember it is 3 consecutive candles. As we can see in our explanation over here, let's focus on this one right now, not this one yet. X that out in your brain. We'll focus on this one first. Okay, this is going to be a bullish fair value gap. And you'll see when I go on my live videos and stuff like this, it's not going to say bullish or bearish. Again, it'll be green or red, right? Bullish is green, bearish is red, whatever your colors are on your chart. But you're going to see people put FVG, okay? That means fair value gap. So for example, you're going to draw this in your notebook. This is a bullish fair value gap. It consists of 3 consecutive candles moving up. So we have our first candle, we have our second candle, we have our third candle. Where is our fair value gap going to be? Our fair value gap is going to be the middle candle between the 3 consecutive candles with the gap in between. So what we are going to do to mark out our bullish fair value gap is we are going to mark from the first candle's top wick to the top candle's bottom wick. From the first candle's top wick to the top candle's bottom wick. And that gap in between is going to be our bullish fair value gap. Why is this a bullish fair value gap? Let's go back to the definition. When price pushes up quickly through this, it creates a gap. So that means in this gap, there is an inefficiency of sell orders that need to get filled to push price higher. Again, does that mean price is going to every time fill every single fair value gap? No, you're going to see hundreds of fair value gaps on the charts that don't get filled. But again, this is what we're going to use for a continuation confluence to identify if we're going to continue in an uptrend to get a better entry, correct? So what are we going to look for? We are going to wait for price to pull back, fill in these sell orders because there's an inefficiency of sell orders, and we're going to wait for a bullish reaction out of this fair value gap. And this is where we'll be able to get a good entry, wrong signal, whoops, a good entry when we scale down to the lower time frames to identify that price is going to continue in a what? An uptrend, because this is a bullish fair value gap. Pretty simple. So let's go over a bearish fair value gap real quick. Going over a bearish fair value gap now. Let's not pay attention to these ones on this side. Okay, we're going to go over this in a second and you'll understand why. A bearish fair value gap. Okay, we're going to go over a bearish fair value gap. You're going to draw this in your book. It's literally the same thing but the opposite direction. Okay, and we'll put a bearish bearish fair value gap. What is a bearish fair value gap? A bearish fair value gap consists of 3 consecutive candles to the downside. Same thing as a bullish fair value gap, okay? What do we have? 1 candle, 2 candle, 3 candle. Where is our bearish fair value gap going to be? The middle candle is going to be where our fair value gap is, but we have to make sure there is a gap between both wicks, okay? If this wick comes all the way down here, right, and there's no gap in between, this is not a fair value gap, right? We need to make sure that the wicks are not touching or overlapping from the first candle to the third candle, and there's a gap in between on the middle candle, okay? So where are we going to mark out our fair value gap for a bearish fair value gap? We're going to go from the top candle's bottom wick to the third candle, the bottom candle's top wick. Literally the opposite. And why is this a bearish fair value gap? Because price moved down so quickly, that means there's an inefficiency of buy orders here, right? What are we going to look for? We're going to wait for price to continue back up into this bearish fair value gap. We wait for a bearish candle closure out of this, and we'll go over entries in the future. Right now, we're just trying to identify what a bearish or bullish fair value gap is, and this is going to be able to give us a better entry to go on this trade to continue to the downside, because if we get a bearish reaction out of that bearish fair value gap, that is showing us that price is pulling back up, filling in these buy orders, right? Because again, there's a lack of buy orders in this area. There's an inefficiency of buy orders. We're filling in these orders, and we're continuing price in the down direction, and we're going to continue that overall downtrend and get a better entry on our trade coming into the day or however we're going to place our trade. Pretty simple. Coming into these examples over here, I get these questions all the time in my Discord and also on social media. Does a bullish and a bearish fair value gap have to consist of all green candles for a bullish fair value gap and all red candles for a bearish fair value gap? No. What matters is the middle candle on the fair value gap, okay? Meaning, if we have a bullish fair value gap here, correct? We can see we have a red candle, we have our green candle, and we have a red candle, correct? We still have our gap in between, but this green candle is the only candle that we care about, okay? We have 3 consecutive candles, but we still mark from the first candle's top wick to the third candle's bottom wick. This is going to be our bullish fair value gap, okay? Same thing over here. For our bearish fair value gap, we could see we have on our first candle, it's green. Our middle candle's red because we're focusing on the middle candle where the gap is going to be. And then we have a green candle here. It doesn't matter as long as this candle is red right here, correct? That means that we are going to mark from the first candle's bottom wick to the third candle's top wick. This is going to be our bearish fair value gap right here. As long as the middle candle is in the direction of where the fair value gap should be. So if we're going in an uptrend and we're looking for a bullish fair value gap to get filled and we want to look for a retrace to get an entry, as long as this green candle is in the middle and we have our 3 consecutive fair value gaps, we can wait for price to come back down, fill in these orders, and continue price in the up direction, right? In the uptrend. Same thing if we're in a downtrend. What are we looking for? A bearish fair value gap to get filled. So we form 3 consecutive candles. We have a green candle, a red candle, and a green candle. Middle candle's red, okay? What are we going to look for? Just because the middle candle's red, this means it's a valid fair value gap. We're going to wait for price to come back up, trade into this bearish fair value gap, get a bearish candle closure, and continue in that down direction of the downtrend. Pretty cool, pretty simple. I think we're good. All right, that should be overall how to identify what a fair value gap is, guys and girls. Don't make it overcomplicated. Go back and rewind the video if you'd like. But again, it consists of 3 consecutive candles, and we have to make sure there is a gap between the 2 wicks of the first and the third candle. So again, we always have to make sure we have that gap in between. If the wicks are overlapping, that means there is no fair value gap there. You have to make sure the wicks are there, and go back to the example in the video where I explained that, and it's pretty simple. So now let's go over in the live charts what a fair value gap is so we can identify it with the candles and help you guys get a more clear understanding on what it is instead of me just having drawings, okay? So we can go on any time frame. This is how you guys and girls are going to go back and study this, okay? You're going to go back and study this. If you don't know what a fair value gap is, you're going to go back in the chart, FX replay, trading view, whatever you guys use, and mark out fair value gaps and do that every single night for like an hour or 30 minutes, right? An hour or 30 minutes. And just to understand what a fair value gap is and get it into your brain so you see it every day in the live markets, just go back and draw out your fair value gaps and see how price reacts off them, okay? So coming right into this market, what do we have? We have a bearish fair value gap. Where's that bearish fair value gap? We have 1 candle, we have 2 candle, and then we have 3 candle, right? Do the wicks overlap each other? Does the first candle's bottom wick and the third candle's top wick overlap in this area? No, they don't. So what do we have there? We have a valid bearish fair value gap. This would be a 15-minute bearish fair value gap, correct? So I'd go to my tool thing, come over here, I have 15-minute bearish fair value gap right here, mark it out, boom, 15-minute bearish fair value gap. Where is there another bearish fair value gap? Right here. Why is that? First candle, second candle, third candle. Are the wicks overlapping? Is this wick overlapping this wick? Nope. What do we have right here? We have a 15-minute bearish fair value gap also. See? Pretty simple. Right? This is all you got to do. Let's go to the 30-minute time frame. Or we can even go to the, let's go to the 4-hour. Let's go to the 4-hour time frame. What are we going to look for? Let's look for a bullish fair value gap. This is literally what you guys are going to go do. All right. Cool. Boom. Right here. We have a bullish fair value gap. What do we have? 1, 2, 3. 3 consecutive candles. Where's our first fair value gap in this area? We go to our 4-hour bullish fair value gap. We have 1, 2, 3. Here's our first fair value gap. Does this wick overlap with this wick? No. And look, here's a perfect example. Our first candle is a red candle. Our middle candle is a bullish candle. And our third candle is a bullish candle. So what candle matters the most for this to be a valid bullish fair value gap? The middle candle. So we go to the first candle's top wick to the third candle's bottom wick. There's our first fair value gap. And then look, we have another one right above it. First candle, second candle, third candle. We go from the first candle's top wick to the third candle's bottom wick. Boom. Another 4-hour bullish fair value gap right here. And we'll put it for you guys and girls right there. Bang. And what do we see price do? We see price trade up, comes back into our bullish fair value gaps. And what does it do? Bullish reaction out of it. Price continues higher. Let's go over another example. Let's go to a different time frame. Let's go to the 5-minute time frame. We'll look for 2 more examples, okay? Look for a bearish fair value gap and a bullish fair value gap. This is literally what you guys and girls are going to do. It's so simple. All right, look. What do we have here? We have 1 candle, 2 candle, 3 candle. 3 consecutive candles to the downside, correct? What is in between? Does this wick right here of this first candle's bottom wick overlap with the third candle's top wick? No, it does not. Here's another example also. The third candle is a bullish candle. And then the middle candle's a bearish candle. And then the first candle is a bearish candle. What candle matters the most? The one in the middle, because we're looking for a bearish fair value gap, correct? So what do we look for? We have a 5-minute bearish fair value gap right here. We'll get our little tool. 5-minute bearish fair value gap. We go from the first candle's bottom wick to the third candle's top wick. Boom. We have a bearish fair value gap. 5 minutes bearish fair value gap. What do we have right after that? Where's our next fair value gap? Right here. We have 1 candle right here. 2 candle, 3 candle. Does the first candle's top wick overlap with the third candle's bottom wick? No, it does not. Is the middle candle, where we're looking for our fair value gap, a bullish candle because we're looking for a bullish fair value gap? Yes, it does. Okay, so we go to the 5-minute. We have a 5-minute bullish fair value gap. Boom. We have a 5-minute bullish fair value gap right there. And what do we have above it? First candle, second candle, third candle. Does the first candle's wick overlap with the third candle's bottom wick? No, it does not. What is the middle candle? It's a bullish fair value. It's a bullish candle. Mark it out from the first candle's top wick to the third candle's bottom wick. Boom. We have another fair value gap right here. Okay, so we'll mark this out, 5-minute bullish. And we can also put this in replay mode for you guys and girls. This is also something else you could do, right? Here's our fair value gaps right here that we have marked out. This is another way you could study. If we want to look for fair value gaps, what do we look for? We'll just keep clicking forward. Bang. What do we create right there? Right? Look, if we want to look for a fair value gap right here, why isn't this a valid fair value gap between these 3 candles? Because we could see the third candle's top wick overlaps with the first candle's bottom wick, correct? There's no space in between here. But what do we get after that? We have a 1, 2, 3. It doesn't matter. This candle is bullish, this candle is bearish, and this candle is bearish. Matters what the middle candle is. What do we have in between? We have a gap because the 2 wicks do not overline with each other. So this is going to be our bearish fair value gap, correct? Let's go over another example. Boom. We create another fair value gap right here. First candle, second candle, third candle. Does the first candle's bottom wick overlap with the third candle's top wick? No, it does not. So what do we have right here? 3 consecutive candles to the downside. This would be our bearish fair value gap. What would we wait for price to do? Come back up, trade into it. Let's see if it gets inversed. Again, we'll go over that. It did get inversed here, so we don't get a reaction off of it. And we'll go over that in the next video. I don't want to confuse you guys and girls with that. We're just going to leave it at that and make this video very simple and easy for you guys and girls. So we'll leave that video here at what a fair value gap is. I gave you the definition. I gave you how to identify a fair value gap, and I showed you guys and girls in the live charts. That is all I want you guys and girls to learn right now. There's no need to try and put that into a strategy yet. We're going to go over a strategy creation video with all these confluences once we start finishing up the series, okay? So you should be able to go back in your charts now and try and learn what a fair value gap is. Remember, when you're trying to learn these confluences, do one at a time. Go back and back test and figure out what they are first. Stop trying to implement them into the markets and trying to hit trades right away, okay? Because then you're going to see that sometimes they don't work and you're going to be like, all right, this is a scam, blah, blah, blah. No. We're going to go over a strategy creation. We'll create a strategy on how to use these from time frame to time frame, from confluence to confluence, and I'll help you guys and girls build a strategy from going on from after learning these confluences, so on and so forth. Okay, so again, this is a video on how to understand a fair value gap. You have the definition, you have the way to identify them. We went back in the live charts to show you guys and girls what you guys should do when you should go back and study this on FX Replay or Trading View. Totally up to you. But again, Tundra's about to exit the room. You want to say hi, Tundra? Where is he? Say subscribe. So like and subscribe to my dad, right? Show him that, everybody. All right, but we'll end that video here. Hopefully you guys and girls enjoy this channel. Again, I'm trying to show you the real truth and real reality. This stuff works for me. Some people are going to talk shit on fair value gaps. I personally like using them. I understand them well. They work for some of my trades, most of my trades. And again, I'm just going to keep showing you guys the real truth and real reality of what works for me in my journey. If you don't like it, you don't got to watch it. You don't got to use it. I'm just trying to help as many people out there as possible and show you guys and girls the truth of my journey. Cool? Awesome. Peace out. Goodbye. See you in the next video.